So they're about to crash the economy, everyone. The interest rates in America are now surging to a point where a massive economic and housing crash is all but inevitable. We have mortgage rates now almost at 7.4%, and we have the 10-year treasury yield at almost 4.3%. And these are levels that are constricting economic activity and causing a massive collapse in buyer demand across the housing market. Mortgage applications to buy a house, they're now down at the lowest level since 1995. You know what that means, folks? It means that over the next couple months, in the summer and fall, sellers on the US housing market are going to have to dramatically reduce the price to entice buyers back in. I think we're going to see price cuts bigger this summer and fall than we saw in 2022 because we have lots of sellers now whose houses have been lingering on the market. They've been lingering on the market for 30 days, 40 days, 50 days, 60 days in some metros. There's some areas in Texas where the days on the market has more than doubled. And you're seeing a similar situation now play out in the stock market. There was a little stock market rally to start 2023 throughout the first half. Now stock prices are going back down. So it's almost as if in unison, all the characters and the players in the economy and housing market, they're waking up to what the reality is. And that's the fact that 4.3% 10-year treasury, 7.4% mortgage rate, the economy cannot sustain itself at those levels. It's just not possible. And what I think we're going to see, my prediction for the next couple months, is that we're going to start to see certain individuals and households tap out. And what I mean by that is certain people are going to start running out of money. The personal savings rate in America is now around 4.3%. on average. That's like the lowest level of all time almost. Historically, an average savings rate's 9 or 10%. People are only saving 4% right now, which is a signal that people don't have money, right? And maybe they're still spending because they're taking out credit card debt. Maybe they took out a home equity loan. I just read an article from the Wall Street Journal, which was talking about this guy in Naples who took out a home equity loan on his house in Naples so he could trade stocks during the day, so he could day trade stocks. So you have people doing stuff like that, right? And they were successful for a little while, and then they lost money for a little while, and they said to themselves, well, I'm not going to sell just yet, but now they're reaching the point of no return. And ultimately, one thing I think we're going to see in the housing market is a lot of investors start to sell off, because I've been talking to you guys about this the last 6 months. Lots of investors, whether they're Airbnbs, whether they're long-term holders, their properties are sitting vacant. Their properties are sitting vacant right now. The vacancy rates are going up. The rents are going down just at a time when the investor cost of capital and interest rate is going up. That's a cocktail that says investors are going to be forced to sell. When these investors start selling, everyone, it's going to be a deluge. It's going to be a deluge of inventory because there's roughly 20 million single-family homes in America that are owned by investors. 20 million. 1 out of 5 homes. There's 100 million homes overall. 20 million are owned by an investor. Now think about what happens when more and more of those investors have their property sit vacant and more of those investors start having to reduce the rent. Obviously some of them are going to sell. And if only 2.5% of all the investor-owned homes in America were to sell, that would double inventory. That would almost double inventory on the housing market. So there's lots of people out there, and tell me if you've heard this in the comments, there's lots of people who say, oh, inventory is going to stay low forever because, you know, it is at an all-time low right now, almost, housing inventory. And they say it's going to stay that low because all these people have 3% mortgage rates and are never going to sell. But what those people don't realize or know is that there's 20 million investors who own homes. There's 40 million people who own with no mortgage. There's 12 million homes in America that are sitting vacant, everyone. There's plenty of places for inventory to increase, and that inventory will increase into the future because there's more and more distress occurring in the economy and housing market right now. There's lots of people I know personally in my life, folks, who I see feeling distressed. I know people who've been laid off recently. I know people who have small businesses who are really struggling on their small businesses. In fact, there was just an article that came out in the Tampa Bay Times that was talking about how loads and loads of small businesses in Tampa and St. Petersburg are having a horrible summer. Like normally it's slow in the summer in Florida, but not this slow. Like some of these businesses, whether it's coffee shops or bakeries, are down 30, 40, 50% on sales year over year. And so if a business is down 30, 40, 50% on sales, well, what's that going to mean if that continues? It means they're going to shut down. And they talked about that in this article in Tampa. Like a lot of these businesses are close to that point of no return where they're going to have to shut down. And Florida is one area, everyone. If you're a buyer and investor in Florida, hold off from buying right now because we're at the precipice of a pretty big downturn. We can already see the early warning signs of days on the market and inventory going up. And then you see these reports about small businesses in Florida having issues. Disney World's empty for the summer. I mean, Florida is coming back down to earth from what happened during the pandemic, but ultimately all of America is going to come back down to earth from that because all the money that the government pumped into the economy, they printed $5 trillion, right? They did all those PPP loans. It meant that, like, even if people had businesses in 2019 and 2020 that weren't viable, they took out a PPP loan, they stayed afloat, and then all the stimulus checks allowed their revenue to go up. But now that's all going away. And in fact, right now in America, there's almost 12 million business establishments. And the number of business establishments surged after the pandemic. We had a record increase in people starting businesses, which, you know, is good, right? I'm an entrepreneur. I know a lot of you who watch out there are entrepreneurs, but I think we probably had too many people start a business over the last couple of years because now the sales and the consumer spending per business adjusted for inflation is going down. It's down by 7% year over year. So think about that, folks. We had a big increase in businesses, then we had a bout of inflation, and now the consumer spending is slowing. So the spending per business is down, which of course means a bunch of these businesses are going to shut down. But of course, it's not going to all happen right at once, everyone, because if someone started a business or if someone raised money for a big venture capital business, they're not going to just close the doors after a year of struggling. It's going to take longer than that, which is why now is that point in time. We're about a year into this economic downturn. Now these businesses are starting to finally wake up and smell the roses, and we're going to see lots of bankruptcies and layoffs. And I want to be clear about something, folks. Like, a lot of people accuse me here on the Reventure Consulting YouTube channel of being overly negative and bearish and pessimistic on the housing market and economy, but folks, I'm just calling it like it is. And what I think is actually the reality is that way too many people are optimistic on the economy right now. Because, I mean, if you look at the housing market, the home price to income ratio in America, that's at the highest level ever. Home prices relative to income. People can't afford homes. Meanwhile, the stock market, the PE ratio of the stock market is also close to an all-time high. It's the fourth highest level ever. So asset prices are still at record highs, which means that people aren't able to participate. You know, the regular person, the regular family, they're not able to participate in the housing market or stock market right now. So ultimately, an economic downturn brought upon by higher interest rates, this will be a good thing. This will be healthy, everyone. It will reset asset prices. Yes, the unemployment rate's going to go up, but we'll also do some creative destruction in the economy. Some of the jobs and businesses that weren't as essential or productive, they're going to go away. New ones are going to take its place. And that's how the economic cycle should work. The problem is we've gotten so used to over the last 20 years that the Federal Reserve comes in and just bails it all out before things get too bad. And I think that's one fear that a lot of people have. I know a lot of you guys watching the channel have this fear, is that the Fed might just step in at some point over the next year when they see the downturn getting worse, and they're going to say, all right, we're going to cut interest rates and print money again. And theoretically, folks, that could happen. That could definitely happen. However, the Fed's hands are a little tied by inflation, which, yes, the inflation has started to come down. And I think with rent going down, inflation will continue to go down over the long run. But in the short term, gas prices are back up. Food prices are back up. It's going to be difficult for the Federal Reserve to justify cutting interest rates and printing money while the average American is paying more at the gas pump in the supermarket. But folks, let's just talk about inflation real quick, because if you're a home buyer investor who wants to understand the future direction of home prices, you got to understand inflation. Because if we look at 100 years of data in the US housing market on home prices versus inflation, what do we see? You see a very tight relationship. Where inflation goes, home prices go. And the principal issue right now in 2023 is that the home prices have gone up way more than inflation. The only other time that happened was in the mid-2000s before the biggest crash ever. So right now, inflation-adjusted home prices are at an all-time high. This is data going back to 1880 on inflation-adjusted prices. What do you see, folks? They're today about 40 to 50% above the long-run average. That's not sustainable. So what needs to happen is either home prices go down, or inflation goes up. And not only does inflation go up, inflation is going to have to go crazy to catch up with home prices. That's the only way the housing market's not going to crash, is if inflation goes out of control. And specifically, I don't mean gas prices going up. I don't mean food prices going up. I mean rent and income going up. Rent and income inflation, that's the only way the housing market can be saved. But the problem is that rent is now going down year over year, according to Apartment List, and wage growth is decelerating down to like 4% year over year. So the wages are growing, but they're not growing nearly fast enough to catch up to home prices and mortgage payments now with mortgage rates at 7.4%. And so if you guys want to learn more about this inflation home price relationship, I would encourage you to watch the video in the link below. You could actually see it here on YouTube as well. I did a members only video looking at 100 years of data on inflation and home prices. My findings were very, very interesting. You guys got to understand this relationship. Access that video and other exclusive deep dive videos coming out each and every week. I do one per week. You got to hit the join button below and become a channel member. The cost is $5 a month, but it's worth it, everyone. I'm doing a real estate 101 course for my channel members with all these videos on deep dives on the housing market. So hit the join button below to access that content.